If you're thinking about buying or selling a condo, there is a major mortgage rule change that you need to know about because getting financing on condos may become even more difficult. So as of August 3rd, 2026, Fannie Mae has eliminated their limited review process for condo projects. So previously, certain condo purchases could qualify for a limited review, meaning the lender didn't necessarily have to scrutinize every aspect of the HOA as extensively. That's changing. For condos that don't qualify for this waiver, lenders now have to conduct a full review. Here's why that matters. When you're buying a condo as a buyer, the lender isn't just qualifying you as the borrower, they're also qualifying the entire condo project. So that can mean that reviewing the HOA documents, the financial reserves, the insurance coverage, deferred maintenance, special assessments, they're going to look at any aspect that could affect the ability to loan on that property. And Fannie Mae is also tightening its requirements regarding the reserve studies. And so it's clear the reserves are dedicated savings funds that are used exclusively for long-term, expensive, or infrequent repairs, specifically for the development. So if an HOA uses its reserve study and it demonstrates that we've got the adequate reserves, the HOA budget generally needs to fund at the highest recommended reserve allocation identified in that study. So if they're short, this could result in having to raise the HOA dues or special assessment. And I've seen a lot of that in the last few years. And there's one other important change coming. So beginning January 4th, 2027, Fannie Mae's minimum reserve requirement for projects goes from 10% to 15% of the annual budgeted income. So what does this mean if you're buying a condo? You need to investigate the HOA as early as possible. You could have excellent credit and plenty of income and a large down payment, and you could still run into financial problems because of something happening within that HOA development. So that's why I investigate the project early. I look at the HOA documents and the financials and the reserve study and insurance and the meeting minutes. And I try to do this before we even write an offer. And I also have the lender review that development to make sure there's not going to be some financial hurdle that comes up somewhere along the line. Now, if you're selling a condo, this matters for you too. If your HOA has inadequate reserves or insurance issues or deferred maintenance, buyers could potentially experience financial delays or not even qualify for conventional financing. And that can shrink your buyer pool, and that can potentially affect the marketability of your property. So one important exception is that Fannie Mae has expanded the waiver program. So for developments that have 10 units or less, this does not apply to those. So the takeaway is this: when you're buying or selling a condo, you need to understand the financial health of that HOA before you move forward. Now, if you're considering buying or selling a condo in Silicon Valley and you want to understand how these rule changes could affect your transaction, please reach out.